Now, when you are dealing with market order flow, market buyers, and all that, the first thing you have to pay attention to is this image you are seeing right here. And now this thing, we call it unit. All right. So this is the smallest unit you should pay attention to, because a lot of people, when you come to the market, now the first thing you want to do is you want to look at the trend. You want to look at how the market has been. Okay, let me turn on this chart now. Okay, so a lot of people will be looking at what has been going on in the past, like all these market movements. No, you don't need all that. Okay, I know you are hearing for the first time, or maybe you aren't hearing for the first time. But all right, so let me turn off the chat now. So let me tell you something, guys. This is this only data you need as a trader. I know it's going to sound somehow to you, but I'm going to break it down so that you understand it. So whenever you come to the chart, whenever you come to the market, this is the first thing you're looking for, the smallest unit. Okay. Okay. I know it's going to be okay. How do I know it's bullish or do I know it's bearish? Now pay attention. Now, when a move begins, let's say this is the origin of this move. I'm going to show you guys how to determine origin, okay? Let's say this is the origin of this move, all right? And then price impulse or price move from this level up to this level, okay? Now, when price get to this level, sorry about this. Now, this is the origin, right? Now, price expand up to this level. Now, whenever a price is expanding, it's creating a range, all right? It's creating a range. Now, it can be a bullish range or bearish range. So the direction will determine if it's bullish or bearish. So if price is expanding to the upside, it's a bullish range. If it's expanding to the downside, it's a bearish range. Now, listen to what I'm going to show you now. Now, when this range is being created, okay, how do you know that if the range is already done expanding? Because a lot of sometimes you can have something like this. Something like this. Let's say this is bullish range, okay? Something like this, and then another thing like this. This is one range, okay? Because some people will say, okay, this is higher, higher low, higher high, higher low, higher high. And then unfortunately, when they see something like this, then they call it market structure break. No, I'm going to give you guys how to fine tune or how to read this in effectively. All right. So let's continue with what we're doing. Okay. So I will let you guys know when you have something like this, you know that it's not ready yet. So this is one range. So if I'm viewing this price action here, what I will say is this: a straight bullish move, straight range being created. Not this one here, but this one. Okay. So this is the one I'm going to work with. Okay. So in my own view, what I'm seeing here is just this, from this level to here. What I'm seeing here is just from this level to this point, from this level to this point. That's all I'm seeing. Not a structure. This is not a structure. Okay. So we'll continue, guys. We'll continue. So this range is already created. Then this level has shown that there's an indication that price want to retrace, or the price, some people call it retrace, some call it reprice, some call it I think they have various names they call. You know, this market has a lot of names, but it's all the same. Okay, price start trading lower. So, as a smart money trader or an ICT trader, when price is trading back into the range, that's why I say you have to first of all mark your range. You know the origin of the range, and then you know the ending of the range. So when price is trading down into the range, you will know what you just know what you're waiting for. Okay, this is the bullish movement, the bullish order flow. So you don't trade this retracement, for at least for now. I'm going to show you guys how to trade it later on, but for now you don't trade this. You're only waiting to buy. Okay, so I have already made a video on how to get a confirmation. You can go back to watch that video on the swing point confirmation. That swing point will help you to know that this retracement is over, for you to start buying. It will help you to know that this impulse is over, that the retracement is coming in. Okay. So what we have here is an impulse swing to the upside. Okay. This is an impulse swing to the upside. Then this is a repricing. Then when price start repricing, or when price start retracing into the range, the first thing you have to look at is the origin. So you are monitoring this level. to make sure that this does not occur. This is what we call market structure break. You all know it. You can identify it every time. So once price start retracing, start repricing, the first thing is your Fibonacci will have to come in right now so that you know the 50% price level. All right. You see the way I'm giving you guys this information is different from the regular way you guys have been used to. Do you understand? So at this 50% Fibonacci level, this is where you start paying attention to whatever you want to do. So in a nutshell, when price is dancing around the premium price level, okay, that is from 50% above, you don't do anything. So what I mean is if price stop at this level, something like this, you don't do anything. So you may be waiting why price come here and then price take off at this level. It doesn't mean anything, guys. So it doesn't mean anything. The only thing is just come here, take this thing from this level and then bring it back here. Why you want the market won't stop moving, guys. So the one of the problem we have with young new traders or upcoming traders is they just because they miss this move, they just get frustrated and then start doing what they don't like or they start chasing. So you prepare for the move, okay? You prepare for the move. Why it's being generated. So let's go back to what I was saying. So you always want to be disciplined to make sure that you're only paying attention to premium or discount level. All right. So at this level now, you immediately price creates a pattern that you want to start buying, then you cannot place your trade. Okay. Yeah. So when this happens, let me take this one out away first. So when this happens from this point to this point, it's now the new range. Okay. This is now your new range. You see, this is how those historical price data is being created. That's why I say you don't really need to go and be paying attention to what has happened in the past. You don't need them. So the only thing you need those historical price data for is if the market is trending bullish or trending bearish. But doesn't really matter, even though they say the trend is your friend. But I want to tell you guys that this is your actual friend. I know a lot of people will argue with what I'm giving you here, but some of these gurus they're going to say, okay, what if I see this range and then the market now come back and pull it out? Yeah, it's possible. That's why we are going to balance it with higher time frame because sometimes when you see this bearish, let's say this bearish range now, or let me take this one off for now. Let's say when you see this bullish range now on higher time frame, sometimes when you go to your lower time frame, you just be seeing those trending historical price data. You see that? So the main thing I'm focusing on right here is these ranges, okay? These ranges. This range is what will help you to determine your bias, your whatever you want to do, your order flow, any decision you want to take. But if you're paying a lot of attention, if I'm paying attention to a lot of data in the past, it's going to cloud your judgment. And so let's continue with what I was saying. So this is now the new range. So my attention has shifted from whatever that happened here, all over everything that happened here. So my attention has shifted out of there. Okay. My attention now is from that level, from this level to this level. Then I'm waiting for that confirmation. You guys can go and watch that video. Then price will give me an indication that it want to come back into the range. All right. So once price starts trading into the range, what I do, I measure it from my origin to the end of the range. Then at this 50% level, I'm monitoring what price is doing, Okay. So to make sure that this price does not take out this origin, because once price take out this origin, that's when we have this bearish range. Okay. This is market structure break. Then we wait for that pattern. So what we just see is a new shift in market momentum. So my attention has shifted to this. Okay, but don't worry. Let's continue. I want to bring everything together so that it will be easy for you guys to comprehend. So let me take up that thing. So I'm monitoring this at this level. So once I get that pattern right here, I execute the trade, and then a new range has been created for me. Okay, a new range has been created for me. This is the origin. Then this is the end of the range. And then this is my Fibonacci price level. You see how this is being generated? That is how you got those your higher highs, higher low, stuff like that. Okay. So this is how you got those your higher highs, higher high, higher low, higher high, higher low. So you see, I wasn't paying attention to whatever that happened from this level back. You see, I wasn't paying attention to this level, whatever that happened here. All right. I'm only paying attention to my current range. That current range is your actual friend. So that current range, that is your actual friend. I know you have heard the trend is your friend, which is I'm not arguing about that. But uh, when you look at something like this, okay, let me tell you guys something. Okay. Before I go there, let me finish up with this range that we are working with now. So when you look at this range now, when you see here, you wait for that pattern to form, then a new retracement level start coming. Okay, you know what to do. Everything we just did here. So you wait for that stuff to push to the upside. You wait for the pattern, then you start pushing it to the upside. But let me tell you guys something. When price is below the 50% level, that's a discount level. This is what you are waiting for to see if there's a confirmation for you to keep pushing to the upside. Okay. Then if it breaks to the downside, then a shift has occurred. All right. Now, listen up with what I want to show you now. You see, when you hear the trend is a friend, this is a bullish trend, right? This is a bullish trend. Okay. Now, this is that daily time frame. All right. Or let's say this is 1 hour, 1 hour time frame. This trend you are seeing here on daily time frame is just a range on a higher time frame. This is just a range, okay, on a higher time frame. It's just a range, one range. Let me change this color. Oh, sorry about that. So this is just a range on a higher time frame. Let me make this in red. This is just a range on a higher time frame. So this is a range on a higher time frame. So you see that trend that was a friend on a particular time frame. It's just a range on a higher time frame. So this range is a friend. Why am I pointing out to this range? Because this is what helped me, guys. If you start paying attention to a lot of data, historical price data, you get lost eventually. So I don't want you to pay attention to all that, because look now, this range that's my friend now on a higher time frame. You agree with me? You agree with me that this range has also a historical price data on that higher time frame. For example, whatever you're seeing here on this lower time frame is still occurring on a higher time frame. Okay, but I will discard whatever I'm seeing here. So let me take this off so that you see what I'm paying attention to. So this is the range on a higher time frame, all right? So you agree with me that this historical prices that are generated on a higher time frame, also on a lower time frame, also occur on a higher time frame. But what I paid attention to on my higher time frame is this range here, all right? Of course, you can still repeat everything you did with this Fibonacci here on a higher time frame. So when you have this adjustment on a higher time frame, okay, that is when you now start having this market structure shift on lower time frame. Okay, lower time frame. Okay, this is when you start having a shift. Then you start generating this price data on a higher time frame. So this retracement level here on a higher time frame will be something like this on a lower time frame. Let me show you guys. It will be something like this. Okay, just the way we generated this historical price data, something like that. Okay, all right. Then so when you're on a lower time frame, now you discover that when this data is formed, this is the only data I'm paying attention to. Let me take off this one for now. I hope you guys are following what I'm saying. So when this data is formed from here to this point, this is the current range I'm working with. This is the current range I'm working with, right? Then you see that I can place the sell irrespective of what has happened here. I can place the sell. Then I am monitoring my discount level on higher time frame, this range. So this thing happened almost every day, guys. I'm going to show you guys example on the chart. So it won't be that I'm just forming this. No, it happens every day. And this is going to help you, make things simple. One of the reasons why most of my students love my approach to the market is because I simplify things. I just because this market is so complex, so I don't want to be dealing with so many data, things. I just want to make things simple because this market is just a simple decision, buy or sell. So why should I be clouding my mind with a lot of information? I just need something easy for me to say, okay, I want to buy, I want to sell. Okay. And when I buy or sell, only one outcome will result from my decision, either a win or a loss. So I'm sure you guys have heard complex pullback, but what my major thing I'm paying attention to, my you agree with me that my main focus here is for you to start identifying these ranges, right? And be working with them, all right? So sometimes when price will be pulling back into the range, okay, it may do something like this, come back, all right? Something like this, come back. Now, this thing is simple. Listen to me. Listen to what I want to show you. And let me make it simple for you guys. I just want to make things easy, simple. Now, you see this a lot in many people's tutorial. They call it complex pullback, and then price will pick up from here. Yeah, this is absolutely true. But let me show you guys something. This complex pullback you are seeing here on this time frame. Let me. Oh, I wish I can. Yeah, I can pull it out. This complex pullback you are seeing is just ranges, range from here to here. My first focus, and then price got out of that range. So my next focus peak was here to here. Price got out of that range. My focus now shifted from here to here. All right. And most times this also is lower time frame pullback. Okay. Now, whether it's lower time frame or higher time frame pullback, it doesn't mean anything. But what I want to show you guys is when you see this kind of thing occurring, you don't panic. The main thing is, first of all, you draw your Fibonacci from the current range, all right? So when price was dancing around, let's assume it's on this time frame, not on lower time frame. When price was dancing around here from 50% above, you shouldn't even be on the chart because you have no business there on premium price action. Okay, so price is dancing here, and then came. So odd is at this level you start paying attention to whatever you want to do. Okay, then another scenario can be when price, because some people will say, okay, price came lower and then I bought and then it took me out. No, first of all, from this point, from this level here, you are doing nothing from this level here. If you bought here and it took you out, that is your own mistake, right? Then here, let's assume here you bought and then it came back. Let's say it came back a lot to take you out. Now, in most cases, this is not a confirmation before you start buying. In most cases, this is not a confirmation. You can go and watch that my confirmation price action. Yeah, there sometimes, so you don't have a confirmation here, a swing point here for you to start buying. Okay, you just have something price dropping, and then it's a shallow move. Some people will chase because when you have a confirmation, I'm telling you, nothing is going to put that price back. It will start moving. Yeah, it will start moving directly when price confirm. But let me tell you guys something. When you are dealing with ranges, okay, when you are dealing with range, irrespective of the style of trader you are, this is what the standard of stop loss is. Your stop loss should be below. Your stop loss is below the range. Because when price take out that range, that is where your setup become invalid. So if you're putting stop loss inside the range, no, it's wrong. Your stop loss is below the range. The only reason why you can put stop loss inside the range is if you are fine-tuning this with lower time frame, okay, which I'm going to show you guys in the future. If you are fine-tuning this with lower time frame, then price shows an indication. See this indication? A break in market structure here. So this break in market structure here occurs on lower time frame, but in most cases, initially when I was coming up, I used to wait for this break market structure on lower time frame before I place the trade. So in most cases, I don't do this again because sometimes one of the reasons why I stopped doing this is because if price break this level, okay, price break this level, let's assume you take the trade at the break of this level. There's a breaker block right here. Let's assume you take the trade here. You see, the range of movement has reduced now from here up to this point. You can't compare it from if you take it below that is here. You can't compare it at all. You can't compare it. So your risk to reward has been affected. Now, a lot of people will say, okay, if price break this level, I will wait for a pullback into the lower time frame, and then I will take the trade, put my stop loss below here. Yeah, this is true, very correct. But let me tell you the disadvantage of this one. When price break this structure on lower time frame and you're waiting for a pullback, most cases you don't get that pullback. Yeah, you don't get that pullback. In most cases, yeah, I just want to point that very clear now. You don't get that pullback. The reason why you don't get that pullback is because you're dealing on this range on a higher time frame. You aren't trading on lower time frame, okay? If you're trading on lower time frame at this break, you don't do anything until you get that pullback, but you are dealing with higher time frame. So that momentum, whereby price balance to this level, let's say this is support level. So that moment we go to drive price with great speed. So you'll be seeing something like this with greater force pulling to the upside. So while you are waiting for price to drop so that you buy, you don't get it. Okay? Unless you are buying at this breaker block here. And that is not a good risk to reward. Because if you buy here and you put a stop loss here, there's every tendency that price will do that thing that you don't want to see. Price will just came back, take out this level again. Because it's still valid. Look at it, it's still valid. And then your stop loss is taken out. So my kind advice is this. Just be putting your stop loss below here. Okay? Just put your stop loss below there. And then be at peace with yourself, guys. So right now, I'm going to go to the chart and show you guys examples of these ranges and how they are formed on the time frame. So each time permits, I'm still going to show you high time frame range on high and how it generated this historical prices. So we are back on the chart now, right here. So I have a range from here to this point. First, my attention is from here. Sorry, let me draw it out. First, my attention is from here, from this point to this point. So I don't pay attention to whatever occurred in the past, but if you are following this price action, you see that there's a market structure break at this point here. Okay. So I think let's start from there. Let's start from there. I think let's start from there let's start from there for the example. So I have a range from here to this place. So this is my current range, irrespective of what happened in the past, what how price generated to this point is none of my business. This is my range. So my Fibonacci level is here. I measure it, okay? And then I'm waiting for price to come back to my premium, to my discount price level, okay? And then you will see some indication that price want to pull up, and then it eventually break to the downside. Now, after this break to the downside, my attention has shifted because this is where I wanted to start the example. I just wanted to show you guys how I should focus on recent range. So this is now my recent range. Then I measure it. Oh, let me show you guys something. Something that very minor but very important. This is the origin of this move from here to here, because that is the other block that broke that market structure, not this one. Later on, I'm going to shoot a video. I'm sorry. Later on, I'm going to create a video on which other blogs you should be paying attention to in every range. I'm going to create a video on that. So this is the other blog that created this range, not this one. Although if you use this one, you are still okay. But the reason why you should use this one very one instead of this one is because when you measure this, sometimes it's because when you measure this, sometimes you just get lucky because most times price doesn't get to the premium level. But this one, it told the Fibonacci 50% and then traded little into the premium level. But if you are using this one currently, you just see this is a massive premium price action for you to take the share. Okay. So what I will do is I will use here instead of here because this is the other block, bearish order block that took out the price action. Okay. If you don't know what other block, I'm going to create a video on all those PDRAs. All right. And then here, a new range is formed for me. So, let me measure it. There's no BMS here. There's no break market structure there. Then a new range is formed here. So whatever happened here, I had no business again. My business has shifted from there to this point, okay? My business has shifted from there to this point. Then what I do next is measure this above 50%. I'm ready to take my trade, all right? That is here. So my attention has shifted to this range from here to here. So I have no business with whatever happened in the past. I'll start drawing stuff. No, I don't have business with that. My business now is from here to here. And then I'm watching my premium or discount price level, price trading to my premium level. And then I shoot from their level to the downside, okay? To the downside. Now, my attention has shifted already. Immediately I have a new range. My attention has shifted to this point. You see how we measure this thing, guys? Easy. Don't complicate things. You see what's happening right here? Price has not traded above premium level, and you see this struggle here. A lot of people will chase it. No, you don't chase it because I've told you guys you wait while you monitor the range. You see price is coming, unable to take out this bearish order block. So if price take bearish order block out, there's no problem. So a new range before, let's assume this price traded to the upside and broke this level here. There's no problem. A new range is just formed. Then your attention has shifted whatever happened in the past. And then your attention is not here. Okay, so I want to show you guys on a higher time frame perspective now. So everything that happened here, I want to show you on a higher time frame. You see that this your historical price data of higher high, lower low, lower high is just a range on a higher time frame. Okay, I just hope it will reflect on this monthly time frame. Hopefully, most of the time it's reflect on monthly time frame higher. So let's draw a bigger line here. So I'll just draw a bigger line here from here to this point. Let's assume we are working from that place to this point, okay? From that place to the point. But what I'm trying to see is that okay, from that place to this point, then let me put a vertical line at the beginning and the vertical line here. So I'll go to monthly time frame. So I'll go to June 2021. I think that is where we saw that price action. So I'm going back to June 2021. That is where that price action occur. Okay. It's not even up to range. Do you know the reason why it's not up to range? Because now what you saw here from here to this point, okay, can't be a range. The range has to be from here to this point. Now the reason why this point can't be a range is because when you go to you can easily identify it on the lower time frame. Let's go to the lower time frame back again. Now you see everything that happened here. Everything that happened here from this level to this level on this daily time frame, you see that there wasn't a shift in momentum. So when there is a shift in momentum to the upside, that is when, like I told you guys on the example, right? When there's a shift in momentum, let's assume there's a break here or a break here or a break here. That is when the higher time frame will not start forming its own. retracement, okay, or repricing to create a new range. Now you will see it very well that this price action took this lower break in market structure took place here 2022. No, there was a break here, there was another break here, and then that's what you are seeing here. So everything you are seeing from this level up to this place is just a range on the higher time frame, all right? So it's just one range on higher time frame. So everything you are seeing from this point, from this low, from this high to this low, it's just a range on the lower time frame. So it's just forming. So the thing you should ask yourself now, is this the end of this retracement? Can price come and take out this low, or price go higher? What you do, just put your Fibonacci level to determine it, right? To determine it. So you see, it's not up to 50% level. You should be focusing on the PDRs on the premium level. So don't be surprised when price will not come back on daily time frame and start trading higher, because the higher time frame retracement is not over yet. So that is just what I want to show you guys. Please, if you like this video, please hit the subscription button and turn on your notification button for more videos like this will be coming up on this channel. Thank you guys.